Hey everyone, welcome back to Corporate Decoder. Today we're diving into Sarepta Therapeutics' latest report, and let me tell you, this one has a plot twist worthy of a medical drama. It's like watching a stock go from critical condition to, well, we'll see, let's break it down. Sarepta, if you don't know, is a company that makes medicines especially for rare diseases. They have drugs for Duchenne muscular dystrophy or DMD, which is a genetic disorder that causes muscle weakness. So this report tells us how they're doing financially. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for some more detail. This report covers their performance for the first 3 months of 2025, ending in March. It's basically an update on how the company is doing, including their money situation. Okay, let's talk numbers. This is where things get interesting. I'll point out the most notable things. First up, their cash and cash equivalents. This is like their checking account dropped from $1 billion to $240 million. Wow, that's a steep decrease. It could signal that they're spending quite heavily. Accounts receivable, which is the money owed to them, increased to $659 million, indicating pretty good sales. Inventory, which is the amount of drugs they have on hand, also went up to $941 million. Maybe that means they are anticipating more sales. Overall, their total assets decreased from almost $4 billion to $34 billion. So while sales are good, they spent a lot of money. One more thing, long-term debt remained around $1.1 billion, so debt is not the reason for the cash drop. Now let's go to their profit and loss statement. This shows how they made and lost money in the last 3 months. Product sales were up $611 million last year. That's a good sign for their drugs, so what is the main reason for that crazy cash drop? Research and development expenses is up, a hopping $73 million compared to $200 million last year. That's a massive jump and likely the reason for that huge cash decrease. It tells us they invested very aggressively in their pipeline. Ultimately, this ended up in a net loss instead of profit from last year, a loss of $447 million compared to a profit of $36 million the previous year. So higher sales, but much higher spending equals a loss. It's a very aggressive spending strategy. Their earnings per share, which is how much profit is made per each stock, went from positive 0.38 to negative $4.60. Again, not a great look, but it is because they are investing very aggressively. So why is research and development expense so high this year? This report details an agreement with Arrowhead Pharmaceuticals. Sarepta paid them $500 million upfront to license some of Arrowhead's drug programs. 2 of these programs aim to treat things like muscular dystrophy, ataxias, and even Huntington's disease. The company also bought $325 million in with Arrowhead. That cash burn is happening even as long-term debt remained around $1.13 billion. They note that about 56% of their accounts receivable money people owe them is from just 3 companies and 17% and 13% by 2 others, which means they need to manage those relationships carefully. The report mentions how much cash they use for operations. It's almost $500 million, $583 million due to lots of money being used on making inventory, which is high. They have also been making money by offering stock, although not enough to offset the huge operational expenses. Okay, so what can go wrong? The risk factors section is pretty long, so let's summarize the most important issues. First, their success depends on their products doing well. If the drugs don't sell, then they're in trouble. That much we know. Manufacturing is a big deal too if they can't make enough drugs, or if there are problems with the manufacturing quality, they could have a serious problem. Competition is also a factor. If other companies come up with better drugs, Sarepta could lose out. Finally, there's always risk the FDA will not be on their side. New policies, rules, or anything could mean the products get delayed. IPs is also important to them, so things can go wrong if another company can get around this. In another update, it looks like there were no unusual trading activities reported by the company's executives. Now, let's put all this information together and figure out what's really going on with Sarepta. The company has made a huge bet, spending almost $500 million on the Arrowhead licensing deal. This explains the big drop in cash. Sales are up, which is good, and the company seems to be planning for increased future sales. However, it is reporting big losses and is spending a lot of cash as a result of those programs, meaning they might have to get even more investment. Also, the company depends a lot on a few clients, so it could have problems if it loses them. Sarepta's taking a calculated risk to potentially dominate the rare disease treatment space in the future. But if any step of this plan goes wrong, that bet might not pay off. Alright, that's our breakdown of Sarepta's latest filing. What do you think? Is the Arrowhead deal a brilliant move or a dangerous gamble? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more details. Thanks for watching. See you next time.